Hello, everybody. Welcome back to this training series, Unlocking Your Crypto Journey. In today's video, we're going to be talking cryptocurrency and taxes. So this is going to be a pretty important video. We're going to be looking at taxes from the perspective of the United States. So your jurisdiction may vary, so make sure you're looking up your local information and regulations regarding cryptocurrency and taxes. Finally, remember, the regulatory environment regarding cryptocurrency and the taxation of cryptocurrency is changing all the time. So make sure that you're employing the services of a tax professional. All right, time to get some education. Let's head into the video. Hello, everybody. Welcome back to the next video in this training series, welcoming new people to the cryptocurrency space. And I'm fortunate today to have BC PortCorp back here with me today. BC, welcome. Thanks for coming back and helping out.
As always, it is a pleasure to be here. I'm glad to talk about this amazing topic that you
Hey,
brought
not
up to
all
me.
the topics can be glamorous.
Hey, I mean, honestly,
It's
I feel like
important, though.
it is definitely an important topic, especially when you want to look at how you want to invest. And I don't think enough people really take that into account on how they're going to invest.
Nope, that's very true. And that's why we're putting out these videos in a certain order to help you to decide how you're going to invest. What's your strategy going to be? What mindset do you need? Now, here you go. No matter what, death and taxes, they say. So we're going to be talking taxes as they relate to cryptocurrency. And now I should say a couple of things to preface this particular video. First, we're going to be focusing our information as if you were living in the US. So if you're watching this video and you live in another country, you definitely have to go do your own research as to exactly what is the tax laws regarding cryptocurrency in your country. Secondly, the information we're going to be putting out today is by no means all encompassing with regard to U.S. tax regulation as it stands right now, April 2025, as we're recording this video. Also, neither one of us are tax or financial advisors. Like I like to say, I'm just an old guy on the interwebs. So make sure you seek out professionals in your area to ensure that you are following all of the current tax rules with regard to cryptocurrency. Now that I got all that out of the way, let's start talking taxes. We're going to go over what the framework currently is right now in the United States. I tapped into Venice AI to help me to put that together in nice digestible bullet points. We're going to be talking about capital gains taxes, and we're going to give you some examples, hopefully a simple example. I asked the AI to explain to me like I was 5, so let's see if it worked. And BC is going to dive into how you can utilize all that information currently with regard to what the way you plan to invest. And we're going to look at some ways you can track your investments, because in order to be able to claim all of this information on your taxes, you got to track it one way or another. And as a bonus toward the end, we're going to talk a little bit about IRAs. For those in the United States, an IRA or a Roth IRA should not be something that's necessarily unfamiliar to you, but you can also access those type of vehicles with cryptocurrency. And though we're going to talk about it in greater detail in a future module, I thought given we're talking taxes, it might be worth at least touching on that subject. BC, you ready to head off and get into this?
I most definitely am.
All right. Then I'm going to bring up on the screen right now what Venice AI has put out for me, and we'll give you the bullet points. I'll read them off to you, and we will give you our 2 cents on them. Based on the search results, this is what Venice AI has compiled with regard to the tax status of crypto here in the United States. Taxation of cryptocurrency is treated as a capital asset. It is subject to capital gains tax. And again, in a little bit, we're going to talk more about capital gains tax. I think that's about it in a nutshell, BC, unless there's something else you want to add to that.
So when it says as a capital, it's talking about crypto as if you are owning property.
Correct.
So if you were to buy a house, say for $200,000, and then you sell your house for $240,000, you have to pay taxes on your gains. The
Yes.
same way that if you buy Bitcoin for, let's say, $60,000 and you sell it for $100,000, you have to pay taxes on those gains because it is property and it is not actually viewed as currency.
Yes.
That is
Correct.
that is from 2021, and it has not been changed as of yet. There is the potential for it to be changed, but you'll have to keep our eyes on that going forward because a lot's going to be happening under this new administration.
That's very true. That's very true. And I guess we should probably also point out you're talking about gains, but you can also take losses if for whatever reason you have sold and you sold at a loss. So you lost money on that trade or transaction. So just to add that as well to give both sides of the proverbial coin. All right, there it is.
You're so
All
funny.
right. I know. I can't help it. There you go. Anyway, okay. The reporting requirements are taxpayers must report all digital asset related income on their tax return and answer the digital asset question. Starting, I believe it was in 2020 or 2019, the IRS put a box that had to be answered if you were dealing with digital assets. So, as far as I'm aware, as of the recording of this video, still remains on all 1040 related tax forms. Anything else you want to add to that, BC?
No, I've had to click that box more than a few times.
Amen to that. Amen to that. All right. The next part is taxable events. Now, this is where things can get a little bit, that there are some gray areas. Let's put it that way. And again, why we're telling you we are not tax advisors. Make sure you seek out the professionals in order to make sure you're claiming your taxable events correctly, and why tracking is important. A taxable event occurs in cryptocurrency when the taxpayer sells or exchanges crypto for cash or other assets, resulting in a gain or a loss, much like we were just talking about. Any other piece that you think we need to add into those taxable events, BC?
You also have to pay taxes on your crypto if, say, on both sides, whether it increased in value or decreased in value, if you are spending your crypto for a good or service. That is
That's correct.
also a taxable event. Anytime crypto leaves your wallet for money, for another cryptocurrency, or for an actual physical or digital good is a
Yeah.
taxable event.
Yep, absolutely. Basically, anytime you use that crypto, it's
Mhm.
pretty much a taxable event as of this moment, as of the recording of this video. So hopefully that will change, especially or even at least if it was for like smaller denominations of crypto. So if gonna, as the example is always put out there, if I want to go buy my coffee with my Bitcoin, you're not going to get capital gains taxes to go buy your coffee. So hopefully something intelligent in the way of
That
tax law changes with regard to that.
that would be nice,
It-
especially if you're going to be doing that for the spending of crypto on a good or service. I think if
yes,
you are using this for a monetary purpose, then you shouldn't be taxed on that because not only would you be paying capital gains tax, but you'd also be paying sales tax.
good point. Good point. Yes. Ugh, tax, tax, tax. But that
Yeah.
is probably for another live stream. We're gonna keep going with this here on this video, though. Okay, the next point, it says capital gains tax rates. The tax rate on cryptocurrency gains depends on the taxpayer's marginal tax rate, which ranges from 10 to 37%. They break out short term versus long-term capital gains in a separate point, but I think it's important to probably bring that into our discussion right now. So with regard to what it says on that point, gains and losses from the sale of cryptocurrency can be classified as long-term or short-term, depending on the holding period. As of this moment in time, that holding period is 12 months. So short-term, less than 12 months, long-term, over 12 months. Anything else you want to throw in on that, BC?
To be clear, when you say 12 months, short term is anything less than 366 days.
I
Long
appreciate the
term,
clarification.
oh yeah, long term is anything 366 days and over. So one day can make all the difference in how you are taxed.
I appreciate that. Yeah, you're right. Again, we're not tax advisors. We're trying to give you the best information, and I'll tell you what, BC just gave you some serious information right there, especially if that's the difference in your tax rate. Hey, good Lord, huh? Crazy.
Oh yeah. Because I mean, the highest you can be taxed, depending on your income on long-term gains, is 20%. So if you are a high earner and you're already in that extremely high tax bracket, then you're going to pay 20% on your long-term gains. But if you are on that short-term and you're that high-end tax bracket, you're talking about 37%.
That's insane
That's
anyway.
outrageous.
It
Yeah.
just is, period. Just is, period. Now, the next piece I want to talk about relates to, and again, I know everybody who is watching this video is probably new to the cryptocurrency space. And BC and I touched on cryptocurrency mining in our educational videos that we put together that you should have already watched. If you didn't do that, go ahead, go back there and watch those, get a little bit of education about the history of this space. But taking that into account right now, cryptocurrency mining and cryptocurrency staking are forms of income that you can generate here in the cryptocurrency space. Well, a couple of forms of income that you can generate here in the cryptocurrency space. To that end, they are also potentially taxable income. Currently, it's considered ordinary income. Income earned from cryptocurrency activities, such as mining or staking, is treated as ordinary income and is taxed at the taxpayer's marginal rate. So, again, depending on what your normal tax rate would be for any other income that you are currently receiving. BC, anything else you want to throw in with regard to that before we get a little deeper into the capital gains?
On the mining aspect of that. So it's not at the value that you received that token at on the day, it is at the fair market value of that day that you are taxed on. So say you received a one Bitcoin at 67,000, which I mean at the time that we're talking, you would get 3.25, I believe it is, but that's neither here. Let's just go off one. So
Yes.
if the time that you received that Bitcoin on that block was 67,000, but the fair market value of that day is 64,000, then that's the value that you would be taxed at on your income.
Good point. Appreciate that. That's, again, clarification. But don't forget, seek out professional tax advice, not tax advisors. I should note, depending on exactly what it is you're doing in the cryptocurrency space, you may have multiple tax forms that need to be filled out. And I'll actually list some of those in the description. So make sure you check that out. And again, make sure that you just figure that information out for your personal needs with your tax advisor. I want to jump into breaking down what capital gains is for those who may be watching this video and thinking, okay, so I get it. I sell a house. I got to pay tax on whatever. I still don't get it. Well, like I mentioned earlier, I asked Venice AI to explain capital gains to me like I was 5. Sometimes, that's the best way. That's the best way to understand, because I'm a simple man. I'm going to read you the example. I'm going to bring it up on the screen here, and I'm going to read through the example that it provided, and we will discuss it a little bit further from there. BC, you ready for that?
Yep.
All right. So again, I asked it to explain it to me as if I were 5. So it said, imagine you have a lemonade stand. Okay, if I'm 5, maybe I do. You buy a big jar of lemons for $10. You use the lemons to make lemonade and sell it to people walking by. So far, so good. After a while, you decide to sell your jar of lemons to your friend for $15. The government says, hey, you made some money from selling your lemons. We want a little bit of that money. Sounds about right. This is called capital gains tax. Now, it says, let's talk long-term and short-term gains. Short-term gains are if you sell your lemons to your friend after only a few days. In this particular example, the government says, that's short-term gain. You have to give them a bigger share of your money because you basically turned that around so quickly. So let's say you have to give them 20% as your short-term gains tax. That would be of the $5, because you bought it for 10, you sold it for 15. So the difference is $5. You now have to give the government $1. Long-term gains would be if you hold on to your lemons for a really long time, like a year or more. The government says, wow, you were really patient. That's not what they say. But anyway, the government says, wow, you were really patient. We'll take a smaller share of your money now. So in this case, the example is 10% of that $5, that same $5, that was your profit. So now you only have to give them 50 cents. To bring it together, if you sell your lemons after a short amount of time, you pay a bigger tax. In the example, 20%. But if you hold on to them for a long time, you pay a smaller tax. Again, in this example, 10%. I think that about sums it up. Bottom line is the government standing like this. Gimme, gimme, gimme. BC, anything else you think we should add to that example? Hopefully, I mean, that made complete sense to me, but hopefully that makes sense to everybody who's watching this video.
Nope, that sounds about right. That's about as dumbed down as dumbed down could be.
Exactly. And I like the lemonade stand thing. Again, if you're 5, I mean, I had a lemonade stand back when I was a kid. I think everybody tried that at some point. Did you have one, BC?
No, I sold trading cards.
Hey, okay. Yeah, the trading card stand. I wasn't that adventurous. I kept all my trading cards, man. I sold the lemonade. All right. Now that we have some basic information, giving you some guidelines, again, not all encompassing, make sure you check with your tax provider. But now that you have this baseline of information, what can you do with it? BC, want to break down for the people how they should think about this information, how they should employ this information, depending on how they plan to invest.
Well, this information can be of great use if you are just starting out in the space, or if you've been in the space for a while and you didn't know about these rules. The amount of money that you are investing in the beginning, so your principal investment, the amount is greatly important. Also dependent is your income. So if you're making a lot of money, you need to think about that aspect if you're going to be actively trading on a daily basis. You are going to be taxed at a much higher rate as opposed to, hey, I'm going to set this money aside. I don't need it for a while. Let me just leave it in there, and I'm going to be taxed at 10% as opposed to 24%, which is That's my actual tax bracket right there. Is if I'm investing for the long term, I get taxed at 10%. If I am investing on a short term trade, I am taxed at 24%. So I basically hand over a quarter of my earnings on every active trade I make.
That's
So that's
insane.
something to take into account if you're going to be investing. So the easiest way when you're first starting out is just to go with that long term capital gains, build up that portfolio size. And then once you've got a portfolio size to make bigger gains off of your active trading, then it's okay to kind of bite that bullet on your short-term capital gains, because you're paying less to the you're paying less in means to the government as a instead of building. Whereas in, say I'm first starting out, I've only got $100 that I'm trying to start out with.
Right.
Maybe the best way to go on that is not to actively trade that. It's to set it aside for the next year or so and only pay the government. Say it goes up 200%. I'm only paying them like $15. That's not so bad, as opposed to you actively traded that $100, you got $25. Well, guess what? The government wants 25% of that $25.
That's insane.
Kind of decreases the amount of gains you get in your portfolio size. Yeah, you're
Yes.
getting that quicker, but it's taxed much differently. And it's also much easier as a new investor to just worry about, hey, I'm paying a flat 10% tax at the end when I'm cashing out right now.
Just for 1 second, BC, I'd like to let everybody who's watching this video and might be saying, okay, what did he just say? That's a lot of information. And it is a lot of information, and it's great information. But I want to let you know that you'll be able to watch an entire video with regard to investment strategies that'll be coming up in the next module that we have coming. So stay tuned for that. And once that video has been recorded, I will make sure that there's a link to it in the description and up in the corner here. So you'll be able to access that directly to see more about investing strategies. BC, thank you. I know that's great information, but I know you probably have a bit more there. So I'm sorry I interrupted you, but go ahead and keep imparting that wisdom.
Not a problem. Also, to take into account when you're doing this investing or trading is tax loss harvesting, which you had brought up earlier, where,
Yes.
hey, I've owned this crypto for over a year, say like Trump and his team did very recently with uh, they bought Ethereum at $3,200 and they sold it at $1,400. Well, they are now able to write off their losses and decrease the amount that they would actually have to pay into taxes on all of their transactions. So whether
Right.
they be short term or long term, you get to negate some of that. So that's another kind of aspect to take into account when you are investing.
Mhm.
It's kind of complicated, and you're going to want your tax advisor to handle that for you. Just so people know, if you're investing in crypto, it's really nice to have a tax advisor. Don't use TurboTax on it. They will
Yeah.
mess your stuff up. They will mess it all up. Don't do it.
Yes. Yes. Use a real person. Yes.
Exactly. Yeah.
A real person that's familiar with crypto. Just saying. A lot of good
Yes.
tax people out there that are great with the W-2s and all this other stuff, but you need someone who's versed in cryptocurrency.
Yes. So tax loss harvesting allows you to kind of keep more of your gains if you've made some decent gains. So like if you made $5,000 from Ethereum, but you lost $2,000 on Doge, you only owe taxes on $3,000 that you made from Ethereum. That's tax loss harvesting. So just something to keep in mind. It also works on short-term trades as well. It's a whole ordeal that I won't really get into because I'm not a tax advisor. So there's that.
Exactly.
For your traditional investing, there is something called the washout rule, which does not exist in crypto right now, which means, hey, I'm going to tax loss harvest. I'm going to sell this at a loss. in your traditional markets, you are not allowed to repurchase that asset again for 30 days. Otherwise, it negates your tax loss harvest. This is not a thing in crypto right now, but it could be a thing as we see crypto more adopted in your traditional markets. So that's
Yes.
something to keep in mind, that that might not always be a thing. You might be able to, oh, I'm selling my ADA for a 50-cent loss on each ADA because I decided to buy it $1 because I thought it was going to continue to go up, and then it dumped on you. Well, you can tax loss harvest, sell that ADA at the 50 cents that it was at, and then immediately write that off, and then you can turn around and buy that ADA back, and it doesn't negate your tax loss harvest. But that might not always be the case. So watch out for that.
Yes. Talk to your tax advisor, do your own research, make sure that you're getting what is the latest information. Again, we're trying to give it to you right now in a very broad overview, US centric manner. But like the crypto space itself, things literally change here
Mhm.
constantly and quickly. Anything else you would like to bring out to the folks here who might be watching the video?
One other thing, we've talked about what things and how they are taxed. I know it gets asked quite a bit, but if you are buying on, say, Coinbase, and you have, say, the Exodus wallet, and you want to transfer your Bitcoin that you just bought on Coinbase to your Exodus wallet, well, that looks like that Bitcoin just left your hand and went somewhere else. But as long as you can prove ownership of that wallet, that is not a taxable event. So just
Correct.
want to throw that out there. It is not actually a taxable event at all. It's something to keep in mind. You won't be taxed on that. You will have to pay your transaction fees, but you won't have to pay taxes on it.
That's right. If you don't lose possession of it, is probably the best way to look at it. You
Yes.
did not create a taxable event. Once you lose possession, whether you trade it, sell it, use it, whatever, that's when the taxable event occurs. Moving it from 100 wallets doesn't matter. Fees, sure, you got to pay the gas fees. But as far as tax, no tax. All you're doing is moving it from one wallet you own to another wallet. It's like taking it out of one pocket and putting it in another pocket. That's basically all you're doing. That's an excellent point and probably something we should definitely have mentioned here because honestly, I
Yeah.
forgot all about that. So thank you, BC.
And I just thought about it and using the information as an investor, because a lot of people, when you're going to be holding for the long term, you're going to take that off of exchange if you're smart. Hopefully you've
Hopefully you're
learned
smart.
from hopefully you've learned from a previous video CryptoCoinMindSet has done, because I know he talks about this, and I know he talks about a hardware wallet somewhere. So uh
All the time, everywhere. Link is in the description. You use it, you save 10% for Tangent. But yes, that's my favorite. You can use whatever wallet you want. Matter of fact, BC mentioned Exodus wallet. Exodus wallet is free. And I'll tell you what, for a free wallet, it is a great wallet. And you can use it on a computer, you can use it in a browser, you can use it on your phone. So I don't know. I love Exodus. It's my second favorite wallet.
Yep, that is my my software wallet. So that's why that was the first one that came to mind, and that's why I threw it out there. So
Yeah, no, it's a great Exodus is a great wallet. I think that kind of pulls that whole aspect together, right, BC? You agree?
yeah, yeah. I would
Okay.
say that definitely wraps that one up.
Okay. So then now that we've given you all that great information, you think, okay, well, how do I give all this information to my tax guy? Well, guess what? That's kind of on you. So there's a number of ways you can do that. I will tell you that when I first started, and honestly, up until about a year ago, I kept track of all of my crypto transactions on a spreadsheet, on a Google spreadsheet. And that way, when it was tax time, I shared my Google spreadsheet with the tax guy and was like, boom, there it is. I will tell you that the more transactions you do, the bigger pain in the keister that is. Okay. So, I have since gone to an actual service. It's called Coinly. If you're interested in that, there's a link in the description as well. But you don't have to use Coinly or any service at all. Matter of fact, BC, correct me if I'm wrong, but you still do it the way I was just talking about on a spreadsheet, right?
Yep. It's extremely for me, it's extremely easy to do. At the time of my purchasing, I write all that information down, and it makes it extremely easy for me to keep track of, not only for tax purposes, but also how much did I make off of that purchase I made back in
Good
such
point.
and such date. So
Yep.
it's not only for my taxes, but it also is for me to keep track of my investments.
No, that's a great point. I'll tell you what, BC, if you wouldn't mind sharing, could you highlight the information that you put into that spreadsheet? So if someone who's new here doesn't want to invest in one of these services, and I get that, I mean, you ain't made no money. Why should you be investing in one of those services? And if you're just doing a long-term hodl, a long-term hold, why not do it yourself? Save a little money. Would you
Mhm.
mind telling everybody what you list there in that spreadsheet?
So basically, at the beginning of it, I have it broken down into what assets I'm buying. Right now, that is just Bitcoin. So we'll just go off of Bitcoin. I have Bitcoin and the amount of Bitcoin that I bought. So say I just bought a Satoshi. We'll do that 1/100,000th of a Bitcoin. So it's 0.00001 is written down in that first slot, and I have at what price point I bought that Satoshi at. And next to that, I have what fees I paid on that purchase of my Bitcoin. That way, I'm keeping track of how much money have I spent and how much
Yes.
fees did I pay on this to kind of counteract, because it's like, hey, did you pay a gas fee or something like that? Same kind of deal, where it's, do I want to sell this right now? Well, I paid 99 cents to buy that Satoshi on top of whatever amount I paid. I might want to let it go up to over $1, because then I'm not
Right.
really making any money. So it helps me on my gains, and it also kind of helps you keep track for those tax purposes as well. At the end of that, you're like, okay, well, I bought all of these at these dates. Well, I'm selling at this date. And we're like, okay, so I'm selling this Satoshi at this price point for this much fees. So it allows you to track how much you paid in fees on everything, to see how much you really gained, and then
Yes.
also how much you're also going to be taxed. So just a very simple way to do it. It takes a little bit of time, but I like doing things myself. I don't trust people. So I'm not in crypto because I'm a trusting person. I'm in crypto because I like to see the proof of trust.
There you go. Fair enough. Fair enough. And listen, there's nothing wrong with doing it yourself. I either way, as long as you're tracking it, that's the key piece. Make sure you're tracking that information. Again, like BC just said, yes, tax purposes, but also yes, hey, I've spent this amount of money. This is how much it's now worth. This is how much it cost me to purchase, to send, to whatever. It's a good way to maintain a good visual in an easy spreadsheet. We all use spreadsheets for things. So that shouldn't be something that is completely foreign to anyone who's watching this video. So definitely take the time to do it yourself. But if you are looking for a service, again, a link is in the description for Coinly, but you don't have to use Coinly. There are a number of reputable services in the crypto space. Feel free to reach out if you want to ask about a specific service, and do my best to answer any questions that you might have. Okay, so now we talked about the tax framework. We talked about capital gains. We talked about how you should employ and implement that into your own investing strategy, and how you got to track all this information. I feel like we're still missing something, BC. What are we missing?
I'd say just finding a CPA. That's basically your kind of last step because there's tons of CPAs out there, but not all CPAs understand crypto. And that's a big part of paying taxes on crypto is
Yeah.
having someone that understands crypto taxes.
Yep. And I found, and I would normally go into a story time here, but this is a recorded video and I don't want to waste everybody's time. But suffice to say that I've been on the end of a great tax guy I was utilizing for years, but at the moment I got involved with cryptocurrency, it was like I was speaking a foreign language to him with regard to cryptocurrency. And it made doing tax returns extremely difficult for that period of time. So finding someone that understands crypto, even just enough for what they could learn in a series like this, will give you a huge advantage, because then as they break down the tax laws, they will be able to not only digest the legislation, but then implement that properly for you. Piece of advice. BC, there's one other thing, like I mentioned at the beginning of this video, that I think we should kind of touch on, and those are IRAs. Again, we're going to bring this up again in the future video regarding investment strategies, so watch for that in the next module. But right now, I'm going to guess that anyone in the US that's watching this video understands what a regular or traditional IRA is versus a Roth IRA. Basically, the tax implications of those are the difference. And I will read quickly the Venice AI's breakdown of those two crypto IRAs, and then we'll talk a little bit about that and we'll bring this video to an end. I'll bring this up on the screen so you can read along with me. What is a crypto IRA? A crypto IRA is an individual retirement account that allows US citizens to invest cryptocurrencies such as Bitcoin, Ethereum, and potentially others as a retirement savings strategy. It's similar to a traditional IRA, but instead of investing in stocks, bonds, or mutual funds, you invest in cryptocurrencies. I will keep on the screen because it gives you a step-by-step on how to create one of these IRAs. But I think that there's no reason to go through that in this particular video. Again, with your tax and financial advisor, of which we are not, you decide if this is the right vehicle for you. But they do talk about the two basic types of tax advantages with regard to IRAs. So I do want to point those out here. There is tax deferred growth. So the value of your cryptocurrency investments grow tax deferred. So meaning you won't pay taxes on any gains until you withdraw the funds in your retirement. So again, that's more your traditional IRA. Then there's tax-free growth. So if you choose a Roth IRA, your cryptocurrency investments grow tax-free, and it says you win. But the Roth IRA is often considered a bigger advantage, or at least according to many of my financial advisors in the past. But both of these options exist with cryptocurrency IRAs. I will make sure to include in the description links to a couple of different crypto specific IRA companies, in particular, iTrust Capital. I have no affiliation with iTrust Capital, but from the research I've done, if I was going to use that particular type of vehicle, that's probably where I would go. So do with that what you will. BC, anything in the IRA arena here that maybe I forgot about, or NSAI forgot about?
All I will say is that if you're going to put something into an investment vehicle, such as an IRA, that you're not going to be able to touch for quite a while, unless you pay penalties on it,
Yep.
very high penalties, of course. You might as well go with a thing that you're for sure is going to be around for that length of time. So, say you're pretty far from retirement. Just go off me. I've got 38 years until I can retire.
Oh, you're
I
just a
might
baby.
not. Yeah, yeah. I might not want to put something like Trump coin in my Roth IRA because it might not exist then. So
Yeah.
lean for the best if you're going to go with that, because we Bitcoin is digital gold and it'll probably be around when you're ready to retire. So just something to keep in mind there.
Yes. I mean, generally speaking, you don't get a full gambit of cryptocurrencies in these IRAs. However, many of these IRA platforms that deal with cryptocurrencies will allow you to trade within those IRAs. And again, check with your tax advisor. But I believe if you do it within your IRA, that is not a taxable event because the money didn't go anywhere. But again, check with your tax advisor. That's not me. All right, BC. I think we've pretty much taxed out this particular topic here. Any last minute information that you would like to pass on before we wrap up this video?
Just that when it comes to crypto, you're not just an investor. You're running a personal business. Every trade,
Good
every
point.
time you stake, every time you swap is a taxable event. The more you know about these taxes, the more money you can keep in your pocket. So whether you're stacking those sats or you're flipping altcoins, get smart, stay compliant, and make that tax code your ally, not your enemy, because they will come for that tax money.
Yeah, they will come a knocking. That's for sure. That's for sure. Listen, that right there, you just got everything you need to know right there inside of like a 60-second statement from BC PortCorp. That is why I have these great crypto minds here helping me to help you. BC, thank you. That was the perfect wrap up right there. I appreciate that.
Not a problem. I'm glad I could give you that.
I appreciate everyone being here and watching this video. Hopefully, we gave you some good information and a good base framework with regard to cryptocurrency and the taxes that are ever encompassed within cryptocurrency. So make sure that you watch the next video in the series, and we will update this particular video when and if there is enough changes in US tax law to warrant it. BC, thank you again for being here today. Much appreciated. I know that I'm going to be asking you to come back on future videos, so I really do appreciate your time. Thank you, sir.
I'm looking forward to it. Always happy to help.
Yeah, he's great. Okay, we're heading out. We'll see you in the next video. A lot of information in that video today. Remember, the regulatory framework regarding taxes is changing all the time. So you have to remain updated to make sure you have the latest information in your jurisdiction. Again, I suggest very highly that you get a local tax professional to help you to do that. Finally, make sure you're following BC PortCorp. All the links to his information is in the description below. It's time to keep the education going. And to do that, why don't you head on over to the next video? It will be right here when it's ready, and I will see you there.